Alright, gang, it's your boy Nature, aka Nature. Alright, so we're back for another video game. So how to use Fibonacci extension to know and when to take profit. I hope this video helped. Alright, so we just ran over how to use Fibonacci extension and when to know to take profit. So in our next video, we're going to talk, or next lesson, we're going to talk about how to use Fibonacci to place your stops so you won't lose money or you can lose less money. Okay, because the market, you are going to lose sometimes, but we talk about that too, about risk management, risking only small amounts on your account. Okay, don't risk 90% of your account, okay, just to try to come up. Okay, there will be more trades. All right, but how do you use Fibonacci to place your stops so you won't lose, so you'll lose less money? So probably just as important, it's just important as knowing when or where to enter, or to take profit. It's knowing where to place your stop loss. You can't enter a trade based off of Fibonacci levels without having a clue where to exit. Your account will just go up in flames, and you will forever blame Fibonacci, cursing his name in Italian. In this lesson, you'll learn a couple of techniques to set stops, when to decide when to use, when deciding you're using your Fibonacci retracement or extension level. So these are simple ways to set your stops and a rationale behind each of the methods. So method one, place your stop just past your next fib. So the first method is to set your stop just past the next Fibonacci level. So if you're planning to enter at 38.2 Fibonacci level, then you will place your stop beyond the 50.0 level. If you felt that the 50 level would have a hold and it would hold there, then you would have pushed your stop past the 61.8 level. You never know what the market's going to do, so you would just put it on the next level, and so on and so forth. All right, so simple. So that's simple. So let's take another look at the 4-hour Euro USD chart, where we show you, what we showed you before on the Fibonacci retracement level. So alright, this is what we showed you before, Euro USD. This is a downtrend. Alright, so price is going to retrace back to one of these levels. It retraced back to the 50 level. We put our stop loss above the 0.618 level. So if you shorted at the 50 level, if you sell at the 50 level after seeing this doji form at the 50 level, you should have pushed your stop loss past the 61.8 level, Fibonacci retracement level. So that's how you kind of use stop loss with Fibonacci retracement levels. Remember, the Fibonacci retracement levels are these horizontal lines, okay? And you draw it by finding for the downtrend. These are the horizontal lines right here. You find it for a downtrend, you draw it by finding the swing high to the swing low. For an uptrend, the swing low to the swing high. Alright, so if you would have had shorted at the 50, you could have placed your stop loss order just above the 61.8 fib level. That's highlighted right there in the box. The reason behind this method of setting stops is that you believe that the 50 level would hold as resistance point. This is resistance. You remember, prices in a downtrend is going to retrace back to one of these levels as resistance. Okay, and an uptrend is going to retrace back to one of those levels as support. But for a downtrend, we're doing a downtrend. So if you believe that price is going to retrace back to the 50 level and hold there as resistance, and you believe that, a lot of traders probably believe that too. Remember, the 50 levels and the 61.8 levels are strong levels for price to retrace back to. If price were to rise beyond this point, then your trade would be invalid. You know that. So the problem with this method of setting stop loss is entirely depending on having a perfect entry. So it's important, just in case price doesn't go to your level, you at least got your stop loss in there, so you won't lose all your account and all your money. So setting a stop just past the next Fibonacci retracement level assumes that you are really confident that the support or resistance area will hold. That will hold. If you put it at the 50 level, you're confident that will hold, and you push your stop loss above the 61.8 level, the next level. So in this point out, earlier, using the tools isn't exactly science. The market might shoot up and hit your stop, eventually going in your direction, going in the opposite direction. So this is usually when we go to our corner and start hitting our heads on a wall. Don't do that. Just get back in the trade and make your money back. Get in with the overall trade. Do not get frustrated. Okay, 99% of trading is mental. So we're just waiting on you. We're just warning you that this might happen sometimes, a few times in a row. So make sure that you put your stop loss there, or your so you won't lose quickly, and and get back in that trend, so you can get your winnings up, and run with the trend. Run with the trend. If it's not in that direction, get in the opposite direction. Get in the direction of the trend. It might be best for you to use this type of stop placement method, though, for short-term or entry day trades. Method 2 is to place your stop past the recent swing high or swing low. So now that you you feel a little more safer. We want you to be a little more safer. Another way to set your stop loss would be to place them past the recent swing high or swing low. For example, when price is in an uptrend, you'll push your long position, and you'll place it at the stop loss just below the latest swing low. Okay, so which acts as potential support level. So if it's in an uptrend, you'll put it at the last support level. Same thing with a downtrend. When price is in a downtrend, and you're in a short position, you can place your stop loss just above the previous swing high, which acts as potential resistance level. So in this type of stop loss placement will give you a trade. It will give you trade more room to breathe and give you a better chance for the market to move in your favor. So in a downtrend, as you can see in this example, price did make this doji and did retrace off the 50 level. You place your stop. For this second example, you will place your stop, though. In a downtrend, you will place your stop above the swing high, the previous swing high. So price doesn't go there, but it gives you a breather. It gives you a lot of breathing room. So this is another example of how to put your stop loss in there, so you won't lose as much money. So if the market does go surpass the swing high or swing low, it may indicate that a reversal in the trend is already in place. So this is how you know that a reversal in the trend is already in place. If price goes all the way from here, from the 50 level, the Fibonacci 50 level, and retraces all the way past the swing high, which is right here. This is the swing high, and goes all the way. And yeah, obviously that price is price has reversed and the market has reversed, and we're going in the uptrend, and you will push your buys in for an uptrend. This means that your trade ideas or setups is already invalid if it goes past your swing high, and that you're too late to jump in. Just jump in. Don't be afraid to jump in in a trade. Just jump in the trade. Setting your larger stop loss would probably be best for you if you're doing long-term trades. It's your swing trading, okay? Like day trading or swing trading for a couple of days, or months. So you can always incorporate this into a scaling method too, into a scaling method, which is the scraping, which we'll learn later on in the courses. Of course, with a longer stop loss, you have to remember to adjust your position size accordingly, as far as like your lot size. So if the trend, so if you tend to trade the same position size, you may acquire large losses, especially if you enter on one of those too early on the Fibonacci retracement level. So it's good not to be greedy. Work on your position size. Don't just try to gamble all your money just because you're trying to get a quick come up. It doesn't work like that. You're not going to get rich overnight in the market. So this can also lead to some unfavorable reward-risk ratios, and may have caused a lot of problems for you. With wide stops. So it's important that you proportion your potential reward. Proportion it out. Don't just risk it all. So which is the better way? The truth is, it's just like it's up to you. Just like in combining the Fibonacci retracement tools with support and resistance, trend lines, candlesticks, to find better entries it would be best to use your knowledge of all these tools and analyze the current environment to help you pick a good stop loss point. So, as much as possible, you shouldn't rely solely on Fibonacci levels or support or resistance points as the basics for stop loss placement. Remember, stop loss placements isn't a short thing. None of these things are short things. That's why we go over everything in our OnlyFans and on all our videos, so you know how to use Japanese candlesticks, how to use trend lines, okay, moving average, okay, RSI, so, and Fibonacci. So, but if you can tilt the odds in your favor, candlestick patterns, we got the wedges, use everything. You can tilt all the odds in your favor by combining all these multiple tools, and it can help you and give you a better exit point or entry point and more room for your trade and to breathe. So possibly, and possibly make you a better reward in a risk ratio, in your trade. So risk ratio, don't risk all your account. You use everything, combine everything together. All right. So in our next lesson, we're going to go over the summary of Fibonacci trading. All right, gang. So this is everything about Fibonacci. This is how to use Fibonacci, to place your stops, so you won't lose, so you lose less money. So in our next video game, we'll go over how to use Fibonacci trading, the summary. The next lesson, the summary of everything that we just learned. All right, gang. So I am the two most powerful words in the world. For whatever we become after them becomes our reality. So I hope that helps. All right, so it's your boy Nature, aka Nature.